Welcome, everyone. Welcome back to Israel Insights. I'm Amichai Magen, the director of the Yan Kum Israel Studies Program here at the Center on Democracy, Development, and the Rule of Law, FSI, Stanford. And today I'm extremely honored and delighted to host Professor Karnit Flug for a conversation about the current state of the Israeli economy and some potential short to medium term scenarios. Professor Karnit Flug is currently the William Davidson Senior Fellow for Economic Policy at the Center for Governance and the Economy of the Israel Democracy Institute, and she's also a professor of economics at the Hebrew University of Jerusalem. Professor Flug served as the 9th governor of the Bank of Israel after a long and very distinguished career in public service, both in Israel and internationally. As governor of the Bank of Israel, from 2013 to 2018, she oversaw the design and implementation of Israel's monetary policy and served as the most senior economic advisor to the Israeli government. Previously, Professor Flug was director of the research department and chief economist of the Bank of Israel, a senior research economist at the Inter-American Development Bank in Washington, D.C., and an economist at the IMF, the International Monetary Fund. Over the past 2 decades, she also served on a number of high-profile public and government committees in Israel, including the Committee on Increasing Competitiveness in the Israeli Economy, the Committee for Social and Economic Change, the so-called, what in Israel is best known as the Trajtenberg Committee, and on the Committee on Israel's Defense Budget. Professor Flug received her MA cum laude in economics from the Hebrew University of Jerusalem in 1980 and her Ph.D. in economics from Columbia University in New York in 1985. Our format, as always, will have 75 minutes. Karnit and I will engage in conversation, and you are invited to submit questions through the Q&A tab on the Zoom platform. Please use the Q&A tab and not the chat tab. And let me just remind everyone that this is being recorded, and the recording will be posted on CDDRL's YouTube channel, where all our Israel Insights webinars are. Simply visit us at https CDDRL FSI Stanford edu/Israel, and you'll be able to find this webinar as well as all past and future webinars. Since we're going to be talking economics, I should just add that I'm certainly not an economist, but I think everybody should know something about economics. Everybody should also know that we're not going to be offering any investment advice. We're not going to speculate on the shekel to dollar ratio or anything of that sort. And I'm sure I speak for Professor Flug as well in saying that please don't take any part of this conversation as investor advice. Professor Flug, a great honor and pleasure to have you with us. Thank you for making the time. Let's start with a little bit of background. You were the 9th governor of the Bank of Israel. You succeeded Stanley Fischer, Zichrono Livracha, in 2013. Tell us a little bit about what the governor of the Bank of Israel does. Is the governor in Israel the equivalent of the chair of the board of governors of the Federal Reserve System in the United States, or is the job different from the chair of the American Fed?
Okay, so first, thank you, and it's a pleasure to be here, not physically, but still in my soul. So it's similar, but it's not quite the same as the chair of the federal government. The governor of the Bank of Israel heads, or as every governor of every central bank, he or she heads the Monetary Policy Committee, which decides about monetary policy. But there are many other roles that the governor has. As the head of the central bank, he oversees the markets department, which is the department that makes sure that the functioning of the capital market is smooth, and that the foreign exchange market is functioning, and it can intervene if there is a need for that. Also, the banking supervision is within the Bank of Israel, so there is an oversight of that department, basically of the regulation of banks. And as you mentioned in your comments, actually quite uniquely, the central bank governor is also the economic advisor to the government. And that means that she sits on every economic discussion of the government. She's expected to provide her opinion about the budget, about the generally about the aggregates of the budget, but also about the composition and its effect on the economy. And I have to say that this role is produces actually an inherent tension between the government and the central bank or the governor, because the view or the evaluation of government policies can be sometimes critical. And so that sort of adds to the inherent tension between central banks and governments. So, yeah.
Let's just mention it's not the only position in Israel where that built-in inherent tension exists. Another one, which perhaps we won't address today, but we'll certainly address in future webinar discussions, is the role of and the position of the Attorney General in Israel that has that dual role. It's a very interesting feature of the Israeli political and governance system. Well, thank you for explaining that to us. I know that there are lots of questions right now about the centrality of the independence of the central banking system. There's a big debate about that going on in the United States. Is it similar in Israel? Is there a real discussion in Israel about the independence of the Bank of Israel?
I think there is a very solid understanding that the independence of the central bank is essential to the functioning of the economy. And at least so far, all the governors have not been political figures, but experts and professionals. Sometimes there are remarks, and sometimes they're made a little bit more aggressively than you would like to hear about, the views about monetary policy. Usually it's an opinion that policy or that interest rates should be lower. By the way, in my case, the opinions were to the opposite side. Because interest rates were around zero at most of my term. Maybe we'll talk about that. But so far, and actually I should mention, sometimes there is legislation brought to the Knesset that to some extent undermines some aspects of the bank's independence. But so far, in general, I would say that the independence is respected, and I think it serves the country well.
Yeah, incredibly important for public trust and for trust in the Israeli financial system. So let's talk a little bit, Karnit, you already mentioned this, about your term in office. Let's locate it in time. And I want to have that discussion briefly before we get to the period immediately after your term, in which both for domestic reasons but also for international reasons, the world has been thrown into what we sometimes call a polycrisis, COVID and geopolitical instability, etc. But let's take a step back a little bit. We're not going to go as far back as 1985 when you finished your Ph.D. at Columbia and when the Israeli banking system was in the midst of a great crisis where we experienced hyperinflation. But let's begin perhaps with this period as Israel emerges out of the Second Intifada. We experience a global financial crisis in 2008, 2009. I believe that Israel navigates that crisis unusually well. Maybe you can say something about that. Then you assumed the helm in 2013 and have a full 5 year term. How do you think about that period of time for Israel and the Israeli economy?
Okay, so as you already mentioned, actually the Israeli economy had a relatively mild effect of the global financial crisis. I should mention we were not at the epicenter of the crisis. There was some fallout, but I think that generally the macroeconomic conditions and the banking system was solid and was quite conservative, didn't take excessive risks. So the effect of the global financial crisis was relatively mild on the Israeli economy. And then actually we went through a fairly long period with a fairly solid and stable growth of about 4% annually. That was true in the 5 years preceding my term, and it continued during my term. So except for maybe one quarter where there was one of the many operations in Gaza, which was called the Operation Protective Edge, which was in 2014. There was a drop of activity for one quarter, but then as from many other shocks, the economy rebounded and resumed growth. So growth was pretty stable at around 4% annually. In my term, inflation was extremely low. Actually, average inflation in the 5 years of my term from 2013 to 2018 was zero. And that was below the target. So my main challenge was actually to bring inflation up to 2% on average. It sounds a little bit utopic right now, but that was the case. Interest rates were very close to zero for most of my time. As I mentioned already, sometimes I got criticism for that. And maybe one side effect of these relatively very benign conditions was that the mortgage market actually expanded very rapidly. Housing prices went up. And the main policy that we introduced in order to deal with the potential stability risks in that market was a series of macroprudential measures, including limits on loan to value and payment to income and so on, in order to make sure that people don't sort of get a mortgage that they might not be able to repay, and also to keep the stability of the system. So this is sort of a quick summary. And I was lucky that during my term there were no major crises, but that changed after I left office.
Yes, I certainly remember this as a very benign time. And it's incredible to think that there were days where you could get a 25 or 30-year mortgage in Israel for, for something like 2.5% interest. It was astonishing. Um, in July 2010, so shortly before you became governor of the bank, Israel also joined formally the OECD, the club of advanced democratic post-industrial countries, a very prestigious club. Israel was working for about a decade to prepare for that. I'm sure you were intimately involved in that process. Could you say something about the significance for the Israeli economy of Israel joining the OECD in 2010 and how that membership affected your work or your thinking about the Israeli economy during the time that you were governor? And after we deal with that, let's jump into the poly crisis that we've been in since, I would say, since about April 2019.
Yeah, so I think beside the prestige of being part of the OECD club, I think a very important part of being in that club is that you can compare, you have all the statistics in all aspects of policy and government performance and budgets and all the statistics that economists look at. You're part of the statistics, and then you can actually compare. You have a yardstick, and you can compare your policies and your performance in every aspect of public policy to the standard of the economies, of the advanced economies. So, for example, we can look at how much or what's the size of the spending of the government in different areas compared to what the standards are. We can look at the performance of our educational system, which maybe we'll touch upon later on, because we're part of the countries that take the standardized tests, and then we can see how our students perform relative to students in other countries. We can see what's the quality of our infrastructure and how much we spend relative to our GDP, relative to other countries. What's the quality of our health system and how much we spend, and is it efficient or not efficient? And then actually the reports that the OECD writes about every member country also points to where we deviate from best practices in every aspect of public policy. So I think having a yardstick and having an evaluation compared to best practices in every aspect, I think is extremely important. It also points to where our main weaknesses are, and that should be the guideline for government's policy. It's not always that way, but potentially it could really improve the government policy in many ways.
Yeah, it certainly is very helpful to policymakers to be part of a peership group of like-minded countries, like-minded economies, to see what works, what doesn't work, and to identify areas where we can become better. I think that joining the OECD was incredibly valuable for Israel in that regard. There's a whole question about the competitiveness of European economies and who do we want to resemble in terms of our economic model, but perhaps that's something that we can talk on a little bit later on. But I want to get back to the period that luckily for you came in the immediate aftermath of your tenure as governor. And let's just position this. I mean, it really is, when we look back over the last 6 or 7 years, it's just extraordinary what the people of Israel have been through, both domestically and internationally. We've experienced wave after wave of shocks that I think would have presented a real challenge to any OECD country and economy. 5 elections between April 2019 and November 2022, the COVID pandemic, polarization, protests, perhaps growing institutional mistrust and tensions over Yariv Levin's judicial overall agenda, and of course the Seventh Front War faced by Israel since October 7th, 2023, which is still open-ended. At this very moment, our Prime Minister Benjamin Netanyahu is meeting with President Donald Trump, and we just don't know whether the coming days, weeks, months are going to be broadly stable, or whether we're going to be experiencing another round of fighting with Iran. So you've been watching this very carefully. You've been reflecting on this period. You're involved in the Israel Democracy Institute, that is one of Israel's premier institutions in analyzing and understanding Israeli society and politics and economics. How has the Israeli economy fared through this polycrisis? And what are the key indicators that we should be watching to try to figure out the resilience or vulnerabilities of the Israeli economy. We'll talk a little bit later about the current moment where I think we both agree that there are these mixed signals coming out of the Israeli economy. But first of all, walk us through your thinking about this period of turbulence and crisis that we've been through over the last 6 or 7 years.
Right. So I think that the maybe the word that characterizes best the Israeli economy performance throughout all these shocks is really resilience. And I think I talked quite a bit about the resilience of the Israeli economy and what are the main characteristics of the economy that sort of are behind this resilience. And still, many times, and especially during the current war, the swords, how is it called in English? Charavot Barzel, swords of iron war, the 2 years of war. And when you look at the performance of the economy, it's really surprising, even for those who really know the economy and are familiar with its resilience. And the ability to rebound after every shock is really something that is, I think, quite unique. Maybe being so exposed to so many shocks actually helped in a way the private sector to become very resilient and to know how to deal with shocks, how to operate during shocks. I think also that the fact that the government in general had a relatively prudent fiscal policy before the shocks and between the shocks meant that it actually had room to have a very strong fiscal response to the shocks, which means that during COVID and also during the current war, the government actually had a very expansionary fiscal policy that helped mitigate the effect of the shock on the economy. So I think this is generally the sort of the way I would characterize the ability of the economy to respond to shocks. The main area where we could see the results of every shock that you mentioned is in the financial markets, because the financial markets are more of a seismograph to current developments. So we've seen it in the first of all, in the foreign exchange market. We've seen during the judicial overhaul or at the beginning of the war, we saw a sharp depreciation of the shekel, weakening of the shekel. And then when things sort of started to calm down, we saw the very strong strengthening of the shekel. We saw the same in the stock market, where if you looked at the stock market before the war and the beginning of the war, and during the judicial over, it actually trailed after the US stock market, where beforehand it was quite correlated with it, with S&P 500. And then we saw that it actually lagged behind. And after some developments during the war, especially the achievements in Lebanon, the beeper, how do you call it?
The, the beeper operation.
Beeper operation, and then the elimination of Nasrallah, you've actually started seeing the shekel strengthening and the stock market recovering. But maybe I can mention sort of the main elements of what is behind the macroeconomic resilience, which we've seen now and again. We had entering into the shock a relatively low public debt to GDP, which, as I mentioned, allowed the government space to actually very actively respond to the shock. We
Karnit,
have
maybe we can focus on this for a moment because the debt to GDP ratio of Israel, even after 2.5 years of war, is really quite extraordinary. I was
right,
looking at the figures yesterday. I believe it's 68,
68, right.
68.6%. Just for reference, Britain is close to 100%, France is close to 120%, and the United States, different category. The dollar is a global reserve currency, but close to 120% debt to GDP ratio. So it's really quite extraordinary.
You're right. And actually, for a very long time, we had very high debt to GDP ratio. And then over a period of maybe 15 years, we have reduced it to 60%. 60% is sort of considered a healthy norm. By the way, it's the median number for OECD countries. And on the eve of of COVID, we were at 60%. Then it went up to 70 during the COVID crisis, but very quickly came down back to 60, by the way, mostly because the economy grew very, very rapidly after COVID. And we were again on the eve of the war at 60%. And I don't think Israel has the luxury of having very high debt and, financing it easily in the financial market. So we do have to have a relatively low debt in order to be able to respond to these shocks. So
And maybe let's just explain why that is. Why does Israel have to have a lower debt to GDP ratio? Again, I'm not an economist, but I'm going to speculate, and you'll comment. You'll give me a grade as a professor of economics. It's partly because of our relatively high spending on security and defense, which is unusually high, and because we simply cannot afford to spend so much of our national wealth on servicing debt when we have very high social, health, educational expenditures. We have a young and rapidly growing population. Did I get this right or half right?
That's part of it, but maybe we can talk later on about the size of the overall government and the size of the civilian services. But I think the main reason why we need to have a relatively low debt is because we have all kinds of risks that are particular to Israel. And when you have risks, you pay higher interest rate because there is a risk premium. Now, one of the factors that affect the risk premium is the size of your debt to GDP. And for a country with all these other risks, I think the ability to sort of get very heavily indebted and finance the additional debt in global markets can be limited. We don't have a reserve currency. So it's not that everybody wants to hold our debt. So if the risk becomes higher, it becomes expensive to actually to borrow and to service the debt. And therefore, a country with the profile and the risk elements that Israel has to have sort of a cushion in terms of its the size of its debt, so as not to have too much of an effect when the debt is coming up on the risk premium and on the interest rate that we pay on this debt.
And that is also reflected in our foreign currency reserves.
Yeah,
Uh,
so another element of resilience is exactly the foreign currency reserve. It's now at $230 billion, which is considered a fairly solid cushion, I would say. Then we also have, unlike the US, we have a surplus in our current account of the balance of payments. And that's important because if you have a surplus, then if there is for some reason you can't export for some time, but you have also more assets in foreign exchange than liabilities, it's also an element of resilience. And then we have a very stable and solid financial system, which is extremely important because during period of stress, you want the banks to be able to continue lending. When there are businesses that don't have income because of COVID for a while, or individuals that can't go to work, if they can get credit and if the banks are able to continue lending during period of stress because they have a lot of capital, because they're well capitalized and very liquid, it's part of what makes the economy resilient. And then maybe the last element that I should mention is the fact that we have extremely dynamic, innovative, high-tech sector, which has shown that it's able to continue performing very well throughout these shocks. So I think all of these elements are some of what is behind the really remarkable resilience. And still, I think that it's not that the shocks don't show up anywhere. For example, if you look at the last quarter of 2023, the economy actually contracted quite sharply before rebounding. In the financial markets and in the foreign exchange markets, you see the marks of the shocks, but the ability to recover is really quite unique, I would say.
Yeah. So a pattern of resilience, a pattern of being able to bounce back and quickly. Yeah, the motto of Israeli high tech during COVID is, Israeli tech delivers, whether with masks or without masks, working at home or elsewhere. It delivers, and there is this incredible Israeli capacity to bounce back from shocks and to adapt and to move forward. And so, just that we sort of close this part of the conversation, everything that I hear from you indicates quite a lot of room for optimism, or rather, sort of judging by past performance, Israel has this incredible capacity to grow and to adapt, and that is reflected in the data that we see coming out of the Israeli economy in 2024, 2025, relatively low debt to GDP ratio. The value of the Tel Aviv 35 index basically doubled over the past 2 years. So if you invested money in the Israeli stock market on October 8th, 2023, you've done extremely well. Our foreign currency reserves are robust and provide that cushion. Unemployment incredibly low in Israel. In fact, we have a real shortage of labor at the moment. So all of these things, I think, are on the and of course the very strong shekel that demonstrates confidence in the Israeli currency, but also might create some challenges for us in terms of exports. It just makes Israeli exports more expensive. Let's transition now, because I think like every economist, and certainly someone who had the position of responsibility for the Israeli economy that you had, you're always trying to look ahead, trying to look forward, and trying to identify challenges that may be coming our way. I want us to spend a little bit of time thinking about the medium term, so 5 and 10 years ahead. But before we do that, if we look at a sort of a 1-2 year time horizon, what are you watching to try to assess the trajectory of the Israeli economy at this point? We've seen the beginning of interest rates coming down in Israel. Do you expect that to continue? And again, I was just looking at the numbers, and I saw that the Bank of Israel currently expects the economy to grow at a decent rate of 5.2% in 2026 and 4.3% in 2027. Do you share this broadly sanguine and optimistic assessment for the next couple of years? Perhaps it's an unfair question. I'm asking you to gaze into a crystal ball, but in a moment I'll ask you to gaze into a crystal ball for the longer term and to discuss some of these challenges that we know are coming our way.
Yeah, so it's important to talk about also about the challenges, because I did talk about the elements of resilience, but I think there are very substantial risks ahead. We will get to that. Regarding the sort of short-term horizon, I think that the Bank of Israel's projections are reasonable because, again, based on performance of the economy after the previous shocks, it's a reasonable trajectory to see the economy bouncing back. I should, by the way, mention that if you look at the current numbers, the GDP is about 3.5 or 4% lower than it would have been if we would have continued on the past path. And the business GDP is about 5.5% lower than it would have been on the previous path without the war. So it's not that there is no price that we pay for the war. It's just that or the bounce back actually recovered some of these losses. I think the main issue that will determine whether the economy is actually getting back on this growth trajectory and recovery trajectory, something to watch would be the government's ability to pass a budget, that will not have a larger deficit than the current budget that is being discussed, that will probably only stabilize the debt to GDP ratio. And I think it's extremely important to start reducing it maybe the following year, because again, we're a very shock-prone economy. We're in a very, we have to always have this room to be able to react. And this means that when the shock is over, we must start working on preparing for the future. But it's not enough to look only at the size of the deficit. We also have to look at the composition of the budget. And here I'm actually quite concerned because, as you already mentioned, the allocations to defense are going to grow very, very significantly. We will have to pay more interest on the debt that we incurred during this period. There are all these resources that go from within the budget to the coalition members that are not productive and are very sectorial. And I'm concerned that if we don't allocate enough resources to infrastructure, to higher education, to investment in what we call the engines of growth, growth will start slowing down. And I think the risk during an election year is particularly strong, and we see this in the budget discussion. I think the demands of the coalition members are very high, and so far this government did not resist those demands. So the composition of the budget is not, I would say, growth friendly. You asked about inflation. I think inflation is likely to continue coming down with the strong effect of the strengthening shekel. When the currency strengthened, the imported goods become cheaper. So we've already seen the effects of this strengthening currency on the inflation. And also during the war, there were all kinds of, I would say, constraints on the supply side, especially workers. Palestinian workers couldn't come and still can't come to the construction site. The people that were drafted on reserves were missing in their posts. And so that actually contributed to accelerating wages in the private sector. I think now, with reservists being released, with some foreign workers coming in, we will see the alleviation of these supply constraints. So I think this is also a force that will reduce inflation, and those two forces are likely to allow the Bank of Israel to continue reducing interest rates over the next year.
Okay, so let's turn to the longer term time horizon. Of course, the more forward into the future you try to you try to look, the more speculative it is. So we always have to exercise epistemic humility. But we have a concept in social science called gray rhinos, right? We're all familiar with black swan events like a global pandemic. But there's also something that we call gray rhinos that are sort of large socio-political or economic or technological waves that we know are coming our way. I mean, we know that an AI revolution is coming, and that will have profound effects on productivity, but also on labor markets, right? So I've sort of listed and I've shared with you, Karnit, these four gray rhinos that are keeping me awake at night when I think about Israel's future and the future of the Israeli economy. And maybe I could mention those four gray rhinos, and you can relate as you like, and perhaps add a fifth or a sixth gray rhino that I've missed. I didn't actually mention the AI revolution, but maybe we can relate to that a little bit. But specifically with regards to Israel, I think that there are these four waves that we know are coming. One, and potentially the most significant, because it is the most structural and perhaps least amenable to short-term policy changes, is this deep demographic shift that Israel is experiencing. And we should mention that historically there were two populations in Israel that were underrepresented in the labor market. It would be Arab Israeli women and ultra-Orthodox Jewish men. I think there's been real progress in integrating Israeli Arabs into the mainstream Israeli economy. And perhaps, Karnit, you will know much better than me, but we've seen substantial increases in labor market participation rates on the part of Arab Israeli women, where we've seen stagnation and perhaps even some reversals is with the fastest growing population in Israel, which are the ultra-Orthodox, that today make up somewhere between 12 and 14% of the Israeli population. But if we look forward to the next generation, we're already getting close to somewhere between 26 and 30 and maybe even 31% of the Israeli population. And so this is a population that is not an underclass in any way. Strong families, strong communities, a culture of learning. If you can learn Talmud, you can learn to code, and you can learn many things. But for a variety of reasons, we see this persistent low levels of labor market participation rate on the part of ultra-Orthodox men, and that produces a growing drag on the Israeli economy, and suggests a sort of a shrinking tax base in Israel, relatively speaking, which is already quite a narrow tax base. Maybe we can say something about that. I believe that it's really the top two deciles in Israel that pay a relatively very high proportion of income tax, not so much VAT, but income tax. And so that is an issue that we're watching. That's already a very big and perhaps multi-layered issue, Karnit. But maybe we'll start with that. Is this something that you're watching, and how are you thinking about this demographic shift?
Yeah, of course, I'm watching and I'm very concerned. I agree. You mentioned that the demographic shifts are not amenable to policy, but I think the behavior of this group is very much affected by policy. And first of all, I agree with what you're saying and the risks, not the risks. Actually, it's a serious drag on the economy. And if things don't change, and if the pattern of not participating in the labor market, and even when they participate, they lack the skills that would make them productive. If that continues, it's really very bad news for the Israeli economy. It will have extreme negative effect. So I think that here policy is extremely important. By the way, if in the past we thought that we can live and we can accept the Haredi men not being drafted to the army, but we only have to worry about their engagement in the labor market, I think it's a deal that the Israeli society is no longer willing to take. The burden on Israelis and the expected burden on Israelis serving in the army, first in their compulsory service and then as reservists, is unsustainable. And it's extremely burdensome, both economically and socially, and the sense of lack of fairness is very, very extreme. So I think as you all know, the legislation regarding the draft law is being discussed now, and I hope that the result will be different than the path that we're on, both in terms of actually getting young Haredi men to the army and also to the labor market. But I think the policies that we've followed for many years go exactly in the opposite direction. Not only they were not drafted, but they were sort of forced to stay in the yeshiva in order not to be drafted. So they didn't get any skills that are relevant to the labor market. And right now, part of this coalition money that we talked about actually goes to schools that don't provide any core curriculum, don't provide a curriculum that includes science and English and math and everything that you really must have in order to be able to successfully engage in the labor market. So I think that the whole policy, both in terms of the draft and in terms of financing educational system that is not providing the basis for people to be able to function in society. Also learning about democracy values. I think this is really crucial. And there are a lot of studies now also that show that the Haredi as a group per family are getting resources, a very substantial amount of resources on average, and they don't, I mean, on net, they don't contribute, but they actually get very substantial resources. You mentioned the narrow tax base, and just to add a number, so 20% of the population pays 80% of the income tax, but 60% of employees don't pay any taxes, don't pay income tax. They don't reach the threshold above which to start paying. So I think this is not sustainable and it will have to change. So this
Yeah.
is your first gray rhino. Now I'll
This is
let you
my first. This
talk
is my
about the
first
next
and
ones.
largest gray rhinos. I think
Yeah.
the other three, and I'll mention them very very briefly. I'm more, and I take your point about incentives mattering to all segments of Israeli society. We've seen in the past that when the incentive structure changes, different segments of the Israeli population respond to changing incentives positively or negatively, and it's just that demographic trends are large, structural, and perhaps it more difficult to change. But there are three other gray rhinos that I identify. One is a sense that and we see this in all the international indicators and indexes of the quality of democracy and the rule of law. We see, again, this is not unique to Israel. We see this in the United States. We see this in other democracies around the world, a kind of decline in the quality of the rule of law and liberal democracy, which we know from the literature is corrosive to trust in the business environment. So that's perhaps one aspect that, especially now, since you are part of the Israel Democracy Institute, perhaps you could say a few words about. But let me mention the other two rhinos that I'm watching. One is a kind of a sense that, especially over the last few years, kind of a lagging underinvestment in infrastructure in Israel. The sense that thank God, our population in Israel is growing very rapidly, but infrastructure, especially in terms of transportation, public transport, hasn't really kept up with demographic growth, and that is creating terrible traffic jams in metropolitan centers in Israel, etc. And last but not least, when we look comparatively at our educational attainments, it's not only that we see very low levels of educational attainments among the ultra-Orthodox and especially ultra-Orthodox boys who receive less of sort of a core curriculum education, but the numbers are not great when it comes to other sectors of Israeli society. So, our success as a startup nation, as an innovation society, clearly depends on an educational system which in the 1960s, 70s, 80s, 90s was very, very good comparatively. And I'm concerned that we're losing that comparative advantage. So anything you choose to say about that would be great. I will invite our audience to submit your questions now. Hopefully we've given you plenty of food for thought. But let's take those gray rhinos, Professor Flug,
Okay.
and then we'll move towards what we should be doing in order to make sure that we're on a much healthier trajectory going forward.
Okay, so I'll talk briefly about each of your rhinos, which I agree with. So I think the erosion of the quality of the institutions, and in particular on the independence, the erosion and the attempts to reduce the independence of the judiciary and the oversight of the decision and its ability to oversee the decisions of the executive branch has been, as you mentioned, shown in empirical research to be detrimental to growth. Actually, there were some Nobel Prizes given exactly on that. And I think I would say, it's very worrisome, and I hope we'll somehow change this course. The underinvestment in infrastructure, again, all international comparison to OECD countries show that the level of our infrastructure is insufficient, and especially in public transportation, but in transportation in general. And it's a crucial engine of growth. And I'm very worried, and past experience actually gives me reasons to be worried that when the budget becomes very tight, the first to pay the price are cuts in investment in infrastructure, delaying the process of investment, and we see this now. I live in Tel Aviv. I'm constantly in one long traffic jam because all the projects are very, very long, and that's definitely something that is detrimental. The issue of education, I would put it very high on the list of my rhinos. It's not only the ultra-Orthodox and the Arab population that have low achievements in all the standardized tests that the OECD is conducting, but also Israelis that are Jews and non-Haredi also have quite poor results. And by the way, the variance is the highest among OECD countries. So the inequality in the results is very, very high. I think this inadequate skills will become even more crucial with the technological advancement and the AI revolution, because in order to be able to use actually the AI tools, you have to have literacy. You have to be able to read what the chat is telling you to do, or the solution that it gives you. And when we look at the reading test, the literacy tests result of Israelis, it's really embarrassing and very, very worrisome. And if we want to have not only a high tech, but to be able to upgrade the productivity of the rest of the economy and to be able to use these tools, you have to have high literacy, and our educational system is not producing graduates that come up with these very basic skills at an adequate level. So I should have add maybe one other, I don't know if to call it a rhino or not, but I think the burden of military reserve duty on the most productive young people, together with the high tax burden at those, of those people who are the most productive and the highest wages, might cause, and we start seeing emigration or brain drain of the brightest and the most entrepreneurial people. And that by itself can be very detrimental to the society and to growth. And I think that all that we talked about may actually lead to more immigration. We've seen over the last 2 years a much lower rate of growth of the population and higher rate of immigration. And that also is something that worries me quite a bit.
Yeah, and this is a topic that we spent quite a lot of time talking with Eugene Kandel about the fear that Eugene and others have that gradually but persistently the incentive structure for that segment of the Israeli population that is most skilled. It tends to be more internationally mobile because of its high-tech capacities and connections. And I think it's also fair to say that politically that is the segment of the Israeli population that is most concerned about the changes and the so-called reforms that have been proposed and pursued by this coalition government since January 2022. And that is an issue that Israelis are increasingly cognizant of and are discussing. I'm actually very happy that we're having this debate because I think it rings alarm bells for Israeli society and says, listen, something has got to give. We're clearly in an environment where the incentive structure is perverse and skewed, and we need to share both the economic and the security burden more equally across Israeli society. So perhaps this is a good moment to try to talk about specifically about what you would want to see happening over the next few years to try to take us onto a better course. We communicated before we started recording about this article that appeared in the journal Sapir about 2 months ago by Michael Eisenberg. The article is titled "Building Israel's $1 trillion Economy." Let's just mention, we haven't mentioned this, that the Israeli economy today is about a $630 billion economy. And Michael Eisenberg's argument is that if we do the right things, and I will link to the article in the show notes, but Eisenberg's argument is the Israeli economy can become a $1 trillion economy. And I want to ask you, Professor Flug, as a last question, whether you think that's realistic, if so, over what time horizon, and what would be the 3 or 4 most important reforms that you would want to see put into place so that the Israeli economy grows at a robust rate. If I remember correctly, for us to become a $1 trillion economy, Israel will have to grow at a 6.5 or 7% rate for the next 10 or 12 or 13 years, which is obviously, very, very ambitious. But if we give it a slightly longer time horizon, what are the critical things that we need to be doing in order to rapidly grow the Israeli economy?
Yeah, so I didn't do the arithmetics over how long and what growth rate it implies, but I think that if we manage to deal with the rhinos that you correctly identified, and I'll talk about what it means, I think there is a good chance that we will accelerate growth. I think 6% annually seems to me, what worries me right now are that the things that we talked about before are likely to reduce the potential growth over the next decade. Now, I think we can counter them by dealing with our poor infrastructure, by overhauling our educational system. By the way, it's not only money. We have 4 different educational systems. They don't do the job. We see this in the tests, and I talked about it. I think it's not only conditioning resources or budgeting, conditioning it on providing the adequate skills, but we have to really overhaul the educational system. I agree with Michael Eisenberg that we need to really radically improve the public sector and its ability to provide services. I think it's very inefficient. It has become Um, I would say that its efficiency has been it has deteriorated, I think, over the last few years. I think we have to make sure that the appointments are professional and they have become more political than they used to be. And I agree that there are practices that are common in the private sector that could be adopted in the public sector, more flexibility in terms of job description, more technology, and more advancement according to performance. There are a lot of weaknesses in our public sector that need to be addressed. I think our population has great potential. Actually, there were some government decisions that allocated substantial resources to try to reduce the gaps, especially in the educational system between the Arab and the Jewish population. Actually, there are studies that suggest that these extra allocations help reduce the gaps in terms of achievements. Unfortunately, the current government reduced some of these remedial allocations, the ones that were supposed to remedy the or reduce the gaps. And I think there is actually quite great potential there if we improve the educational system among the Arab population. So I think these are the main elements of what or how the government budget and its policies can help support growth. I hope that the very heavy defense burden will not actually shift the allocation in the wrong direction, and that's a serious risk at the moment.
Yeah. So in summary, there are strengths, there are vulnerabilities. We've identified some key gray rhinos. All of them are amenable, at least to an extensive degree, to positive change as a result of sound policy. And we are Israelis. We always live with hope, and our national anthem is called "The Hope," and I think that hope is not empty because we've seen in the history of the state of Israel a country that began its life as a very, very poor country and has managed to overcome tremendous odds and tremendous challenges and to develop economically. So when my students or colleagues kind of point to seemingly insurmountable challenges in Israel, I remind them of this incredible Israeli ability for dramatic and positive change. We saw that in the mid 1980s when the country almost went bankrupt and we faced this terrible banking crisis. Sound leadership managed to turn the ship around and to take us into a much, much better direction. Professor Karnit Flug, I want to thank you as an Israeli, as someone who depends on the Israeli economy and wants to see it thrive. I want to thank you for your service and for continuing to work in this space. We are coming to Israel this summer, and we will meet with, among others, friends and colleagues in the Israel Democracy Institute. And so I very much hope we'll have an opportunity to meet in person. And please also let me know if you visit the United States. It would be a great honor to have you visit us here at Stanford. So thank you, everyone, for joining us. If you're not signed up to our newsletter yet, please Google us, Yankum Israel Studies Program at Stanford, and you'll be able to receive notification of future webinars and all of our events that are open to the public. Not everything that we do is open to the public. Much of our work is focused on the students and focused on education and research. But you can engage with our programs by being in touch with us. Professor Karnit Flug, toda rabba. Thank you very much for this fascinating conversation.
Thank you very much. It was a pleasure.